Hello, everyone, and thank you for tuning in to the Oakwood Financial Group update. I'm Joshua Doby. Thank you again for your continued willingness to embrace this medium. I hope that this finds you healthy and well, and certainly as we're moving into the next season of COVID-19, as we enter the fall season here, I hope that you have been able to adjust in the best ways possible, considering the very unusual times in which we're living right now. I want to be able to give you a couple of points of update as part of what has become our custom here on the Oakwood Financial Group weekly update, and looking at some macroeconomic points, and then also taking a blush, if you will, at the upcoming political season. And we're pretty much into it at this point, but certainly looking at the first week of November as in terms of what comes next. But let's go ahead and get into some macroeconomic data. First, relative to unemployment claims, we're continuing on a good trend line. Our new claims relative to the kinds of claims that are filed each and every week, what we classify as new unemployment claims, we're continuing on a good trend line there. Still about 3 to 4 times what's ordinary as far as new unemployment claims are concerned, but we're moving in a good trend line. Just this week, about 800,000 new claims. Again, still 2 to 3 times more than what would be considered a quote normal week, but an encouraging trend line. Likewise, an encouraging trend line with continuing claims. Those folks who have been on unemployment more than 1 week or 2 weeks or longer, we're now at about the 12 million range. Seems like a big number. It is. It's still about 4 times larger than what would be a quote normal week in terms of continuing claims. But from a spike of 25 million, now we're about half of what that extreme was. So some encouraging kinds of things. Definitely an indication that the programs that have been implemented by the Treasury Department, by the IRS, and also by the Federal Reserve have indeed been working for folks. And while that has not eliminated the financial pain and impact of COVID-19, it has mitigated it in significant ways. So those are encouraging points to see. As far as legislation is concerned, I am chuckling. I feel like a broken record to those of you who know what records are, but I feel like a broken record, as I've said this now over the last several updates. It's coming. There has still been a very slow slog through Congress relative to moving forward with getting something resolved. Still a lot of disagreement, still a lot of political parlay, which has been happening, a lot of horse trading going on behind the scenes. I would say at this point, we're probably still 2 to 4 weeks out before we're going to have legislation. It looks like we're going to have something. It's probably going to be a combination of direct payments, again, to individuals and perhaps those who have dependent children. Very likely some increase in, quote, normal unemployment insurance to help those who have been a victim of forced government shutdowns to be able to have a little bit higher benefit than a normal kind of situation. That looks like that's going to be in the offing as well. And it also looks like there's going to be some amount of assistance again to small businesses through the SBA or Small Business Association, specifically also for those businesses which have been required to shut down or reduce operations dramatically due again to a forced government mandate or those kinds of things which have been a result of COVID-19. So keep an eye out for that. That's in the pipeline. Again, I'm chuckling. I feel like I've said this now to you several times because I have, but that's going to be probably something that's going to happen over the next 2 to 4 weeks. So make sure that you continue to take a look at that. A couple of other items as well, which have been kind of interesting, and literally this has been happening in real time as of the time of this recording. We're starting to see schools reopen, and not going from 0 to 100%, but starting to announce some phased-in return to the campus, which has been very interesting to see. It's probably ahead of the timeline which was originally espoused by many of these particular school districts, but we're starting to see it. A lot of charter schools and a lot of private schools have already been on campus, but most, if not the overwhelming majority of our public schools have not been. Now we're starting to see public schools who are saying that they're going to get back on campus in some kind of phased-in sort of process. So kind of interesting to see. Continue to be alert to that. Certainly we'll bring you any continued updates on that end of things and what the financial impacts of that kind of thing will be. But certainly it seems like that will continue to be a healthy return to, quote, normal, even though we have quite a long ways to go to get back to where we were pre-COVID. Along those same lines, for those of you, and I know there are more than 1 or 2 of you out there who are watching this recording, Big Ten football looks like it's going to be a reality. here just a couple of weeks after the Big Ten Conference announced that they were not going to be having a Big Ten season. Now, literally just as of a day or so ago, they announced that they are. And we don't have all the details on that yet, and we're not sure exactly how that's going to look, but perhaps from some observational experience, both with other conferences and with the NFL, perhaps some inclination that we may indeed get Big Ten football here sooner rather than later. And I'm sure there are more than a handful of you who are wondering, well, what does that have to do with finance? Fair question. The impact, the financial impact of big-time Division I football is literally billions with a B in terms of dollars. So there is some significant impact to that, not only to the universities involved, but also due to all the ancillary businesses, which are a direct function of literally of big-time Division I football. I'll just offer to you a study that came across my desk probably about 6 months ago now, give or take. And it was specifically talking about State College, Pennsylvania, which most of you know is the home of Penn State. And State College obviously is impacted directly, usually in a positive way, by Penn State home football games. The study that I read said that there is as much as $80 million per year of benefit that State College and its ancillary businesses and individuals in terms of tax revenue receive as a direct function of Penn State football. So when you're talking about $80 million for one community, obviously then you get into television contracts and you get far above and beyond that. You get into billions with a B very easily in terms of economic impact. So the fact that there is going to be the possibility of Big Ten football, and obviously I love football, as many of you know, but there is going to be some significant economic positive impact if that decides to move forward. So that is a notable economic point, but I'm probably sharing that with you primarily because of my love of football and football season overall. All right, I mentioned to you about the political season. I don't need to tell you, if you watch about 10 minutes worth of television, or if you're listening to the radio, or if you're opening just about any newspaper or magazine, you know that we are indeed in the throes of the political season. And November 3rd is our election day. Make sure, regardless of your political affiliation, that you do indeed exercise your right to vote, whether that be in person or if not, for whatever reason, make sure that you get your hands on an absentee ballot so that you can indeed take advantage of that sacred right that we have as citizens of this great country. But what does that mean from a financial and economic standpoint? No way to know at this point. Lots of unknowns that are out there. Certainly the presidential race is going to be very, very close, at least judging by all the polling data that we've seen to this point. The Senate race, where there is possibility that could indeed flip. Right now it's Republican majority. There is a possibility that could go to Democrat majority, but that is so, again, very, very tight in terms of all the polling that we've seen on this end of things at this point. No way to know for sure where that's going to land, but definitely you want to pay attention to it because depending upon how those races end up, especially if the Senate flips, there could be some adjustments relative, especially when it comes to financial ends of things, to our tax policy. So stay tuned on that. If that indeed does become a reality, we're going to bring you the best information that we have in terms of impact to you, but definitely pay attention to that. It could be a big deal, and we certainly will give you that data as quickly as we have it here. All right, so we got the macroeconomic data. We have big time football, which is important. For all you golfers out there, pay attention. I don't need to tell you to pay attention. It's US Open weekend. Quite a bit later than what we normally enjoy as far as US Open weekend is concerned, usually earlier on in the year. But it is US Open weekend, and so will be a lot of fun as well to watch that. You're right. There is definitely financial and economic impact to that, but I just share that with you because that's fun, especially if you're into golf. But looking at it, again, relative to your particular situation, not, of course, looking at anything from a recommendation standpoint, but the kinds of things to keep in mind. In here, a couple of weeks, we're going to be entering into earnings season. Again, very, very important to keep a watch on that. We obviously do internally here at Oakwood in understanding how companies are going through it. It continues to be a very bifurcated market, meaning you have the small portion of the market, rather, which is doing very, very well. Larger part of the market, which is still being very challenged from a performance standpoint. I'm talking most especially about financial companies, oil, gas, and energy companies, durables over here as well, having a very, very challenging time. And then primarily the small group is comprised of tech companies, and again, doing very, very well, but relatively a few number of companies who are in that camp. So we're going to be watching earnings season. The big item that's sitting out there after the presidential election and senatorial, frankly, election season, the next big item that's sitting out there in terms of what we're observing and seeing how this is going to be impacted by COVID-19 is going to be the retail season, and something that we most commonly call the Christmas shopping season. Because our GDP, our gross domestic product, or what we produce as a country, is about 75%, or about 3/4 of it directly affected by consumer spending, meaning what we have spending for what we want and what we consume and what we need. Very big deal when we come into the Christmas retail season. It's going to look very different any way that you cut it. We're already anticipating probably a 2x impact as far as online spending is concerned, but there's also probably going to be a significant decrease in terms of the in-person spend in terms of retail space, meaning those people who are going out physically and in person to spend for the Christmas shopping season. We're already starting to see big companies, big retail companies, saying they're not going to do the traditional Black Friday or Friday after Thanksgiving kinds of in-person incentives that they would normally do, because they're not anticipating anywhere near the same crowds that they would normally anticipate pre-COVID for Black Friday kinds of events. So we're going to take a watch on that. That's going to be a significant indicator, as it often is, not always, but it usually is a significant indicator about consumer confidence. So as we're watching that and we're seeing how folks are spending into the Christmas season, it's not that binary. It's not just that singular indicator to tell us how consumers are inclined, but it certainly is a big indicator in that consumer algorithm, indicating again about their confidence in terms of not only where they are, but where they anticipate things will be. So that's big on our radar screen as well. And certainly as we get concrete data on that, we'll bring it to you. Well, friends, as I get to the end of time and I don't have anything pertinent that I think is helpful to you, I like to draw our time together to a close. But please, as always, never hesitate to reach out to us. I always enjoy hearing from you, hearing about how things are, and hearing about what's happening in your end of the world, especially in this very unique time. Always feel free. Send an email. Give me a phone call. Happy to set up a Zoom video call with you. I figure by the time all of this is done, I'm going to actually be pretty good at Zoom video calls, but always happy to do that kind of thing with you, and certainly always happy to chat about things that are not economic or market related as well. Well, dear ones, again, I hope that this finds you well. Please never hesitate to reach out to me at any time for any reason. Always happy to chat with you and to be helpful in any ways that we can. Until the next time, I'll look forward to chatting with you soon.